Hey everyone, Kevin Lewis with Home Life Benchmark Titus here, and it's time for your September 2020 Fraser Valley Real Estate Update. What a year 2020 has been. We went through the pandemic in the beginning of the year. Well, we're still in the midst of the pandemic, and we go through some of the slowest spring that we've ever had in real estate, which makes sense with the pandemic and lockdowns and everything. And that feeds right through into July and August, which have been two of the busiest months for those months on record. August 2020 was the second busiest August for the total number of sales in the Fraser Valley, second only to 2005, and coming in 39% higher than the 10-year average for the month of August. Now, July 2020 did edge out August by about 2.9% in total number of sales. However, both of these months saw way more than we would ever expect to see in a normal summer anyways, let alone in comparison to the numbers that we saw in April and May. So today we're going to take a look at some of the reasons why this might be happening and what exactly is going on in the real estate market. First off, the two reasons why housing typically, or two economic factors that we can typically scale with housing sales activity going up and staying down is immigration and employment. The anomaly here is that both of those numbers, both immigration and employment, have dropped due to the lockdowns and coronavirus. So why would housing suddenly be going up? Well, we'll start by talking about immigration, and we can just wipe that one off the table. Immigration is obviously at a very low point right now due to the pandemic and lockdowns and everything, so let's go look at unemployment. While it is true that unemployment has gone way up since the lockdowns and everything, what hasn't really been touched on, that I have looked into on a couple of different sources, from economic sources, university professors, etc., is that a lot of the jobs that were lost during the pandemic were actually lower paying entry-level jobs in the service industries, typically jobs not connected with people ready to buy a home, more so entry-level jobs where you're still going to be renting and saving up money for that down payment. Now, that may cause some slowdown in the near future for first-time buyers coming up, as a lot of those first-time buyers, a lot of those people that were laid off from the pandemic were soon to be first-time buyers, and this is certainly going to hurt their chances, and there's going to be things that we can do to help make things happen there, but we're going to see those effects happen later on. What did end up happening was a lot of jobs, a lot of people in the already owning homes or already have the down payment ready to go have moved up in their jobs to positions where there is more stability, and the majority of these jobs did remain during the pandemic. Now, of course, there are certain sectors where there's very high up people in companies that unfortunately did lose their jobs or were temporarily lost their jobs, and that's awful, of course. But the majority of the jobs that did remain working were people who were higher up in their positions, and the money kept coming in. So with that, we can basically rule out unemployment as a big reason why prices should be coming down and why prices have actually been going up, because we can look at those factors that the home buying population on the whole, the majority continued to work through the pandemic. Now, on that note, there was also another huge shift in the market, or not in the market, sorry, in the workplace, where working from home became the new norm. What does this mean for housing, and how does this affect housing? Well, of course, this means that the commute from your bedroom to your home office is the same whether your house is in Langley, whether it's in Chilliwack, or whether you're in Yaletown next to your office. It doesn't matter because you're not going to your office every day. And as we know, houses, the further east you go, generally the lower the price of real estate goes. So we're starting to see a big shift of people who work downtown, who traditionally had to work in their office every day. Now maybe they only have to go once a week, once every 2 weeks kind of thing, and the rest of the time they can work from home. Well, that longer commute now becomes, you can ignore that longer commute when the cost of your housing has come down so significantly, and you're only doing that longer commute 1 or 2 days, 3-4 days a month kind of thing. It makes it a lot more justifiable to make the move out towards the valley and further east. Now, this is of course all just speculation based on different facts and whatnot, But this is also, we can see that this may be correlated to the fact that Fraser Valley sales actually went up significantly more than Vancouver sales did through those 2 months. Not only that, but prices also increased a little bit higher in the valley than they did in Vancouver. Another factor that certainly can't be ignored is the historically low interest rates that we're currently seeing, sometimes below 2% for a 5-year fixed-term mortgage. That's absolutely unheard of in our history in the Fraser Valley, and we know it's not going to last forever, but it is going to last for the foreseeable future, most likely through to the end of 2020. Lower interest rates, of course, means more buying power for buyers, and if you're moving up from a higher interest rate home, selling that home to somebody who's going to get a lower interest rate as well, at a higher price than you paid for it, you can go and buy a larger home, and the difference is not the same had you have bought that higher priced home with higher interest rates. It's actually lower. So we're seeing a lot of people take advantage of this and make the move up that they were going to make, maybe move up in a year or 2 years. Because the interest rates are so low, they've decided, well, let's make that move happen now. We qualify, we can make it work, let's do it. We're seeing a lot of buyers doing that right now. And of course, first-time home buyers, you guys aren't forgotten about all this either. This is huge benefit to you, as any lower interest rate, lower stress test and everything that's come along with that has made it that much easier for you to get into the market as well. As far as prices go, we are up on average about 5% from 1 year ago in August 2019. However, we're still about 2.5% lower than the peak in June 2018. I would predict that this price increase is likely going to continue into 2021 through the spring, assuming that there's no more lockdowns and that things are under control with the pandemic. Of course, if things don't go to plan that way, who knows what's going to happen. I don't see there being a crash of any sort, but I wouldn't expect prices to continue to go up if there is another lockdown. I think that would halt activity again quite a bit. However, if there is no more lockdowns, I would be surprised if prices did not continue to increase through spring 2021, potentially breaking the record of June 2018's HPI price. We're also currently in what's considered to be a seller's market, where on average 30 out of every 100 homes are selling that are on the market for a given month. Anything below 20% and above 12% is considered to be a balanced market, and anything below 12% is considered to be a buyer's market. So where we're sitting at around 30 is definitely a seller's market. Townhomes have been the most sellable for August 2020, with about 41 out of every 100 homes that were listed selling. Detached homes were second, with about 32 for every 100 homes listed, and condos were at the bottom, probably because there's the most condos available, at 23%, which is still definitely a seller's market. All in all, if nothing else changes with the current pandemic situation, the market is in a very healthy place and very likely to stay stable for the foreseeable future. So if you are thinking about making a move, that move up may be a great time to do so because of the historically low interest rates. And if you're thinking about downsizing, it could be a great time to do that as well because there's so much options to choose from as a buyer right now. First-time buyers, it's still a good time to get in the market. It's not a great time because, of course, prices are high. However, the positive side is that the stress test rate has come down in the last couple of months, with the Canada Prime mortgage rate coming down with it, or reflecting on the Canada Prime lowering the rate. I look forward to hearing from you guys with any questions that you have, whether you give me a call at 604-218-5635, send me an email, kevin@kevinlewis.com, or just leave a message in the video below. I look forward to hearing from you, any of your questions, and if you are thinking about making a move in the near future, definitely get in touch, and I'd love to start making a plan with you today. Thanks for tuning in, and I look forward to hearing from you.